What is happening today, traders? We are going to be getting into a couple different indexes and stocks, IWM, SPY, GameStop, AMC, and NIO all in one video. But I wanted to start this by saying I got into an accident last night. Actually, a U-Haul had hit me. I was in park. And so I might not be a little bit more sharp or a little bit more clear, concise. I am okay. That's the biggest thing. So send me your blessings. Send me your prayers. But let's get into IWM. IWM is actually not looking too bad. IWM and SPY both did exactly what we had planned for them to do in the beginning of the week. We just haven't really seen that follow through or that gravitas, right? We haven't seen that oomph come out of the small cap stocks yet. But typically, you will see that follow. However, in seeing that move higher from the hammer candle and the 50-day EMA like we had talked about, you actually saw a gap up, a 1.56 gap up on SPY, which is actually a crazy, crazy green day in the market. And then today, we are just barely red on the day. So I would assume, right, if I'm just looking at this from a trader's point of view, you're going to do something potentially in falling back beneath this support to fill the gap. That would make the most sense to me, but it is also possible here that you are going to continue, same way that NIO is doing, right? You are going to continue to kind of ride this previous resistance and establish it as new support. Now, I wouldn't really like this because I want to see you fill the gap before you go higher. Otherwise, you're creating this scenario in which you may have to come back later, just like you did back here, right? You gapped up, went higher, and then you created this longer, choppy consolidation down to fill this gap, to fill that gap, right? So what I'd like to see is this kind of sideways trickle down, fill the gap, and then bam, right? Really bounce higher because you've been in this choppy range for about 2 months now. I mean, it's coming on since like not July, but end of August, beginning of September. You've been in this mid 600s range, and something's got to give. Something's got to give eventually, but IWM doing the exact same thing that we had talked about, right? And pretty much mirroring SPY. You saw that crazy candle on Friday's close. Monday's open was a little bit less bullish than the SPY, but still bullish, right? It was a hanging man candle, but you closed above the 9 daily EMA, and then I would just assume that you're coming back to fill this gap before potentially creating this U-shaped accumulation pattern. That is what we want. We want this thing to bounce and come back to an all-time high. So that's what we're looking like on the indexes that a lot of our favorite stocks follow. And that pretty much sets the precedent of what our stocks are going to do, right? I mean, if this thing's going to chop, there's a high likelihood, in all honesty, that you see chop in NIO, right? And whatever you want to call this formation, you can call it so many different things. You can call it a bull flag. If this plays out, if you come back up here and tap your head against 771, reject, well, then that could be a bullish triangle or ascending triangle. And then you could also, on the short side, right, call this a head and shoulders pattern. So we're really just waiting for the markets to give us a little bit more clarity, and I will continue to update daily, guys, of what formation is potentially playing out here and what are the implications of this, right? But for the time being, the main stock that, and I'll circle back to NIO, but the main stock that is moving against the market is AMC right now. And it's pretty fascinating to see the macro picture of this chart because you had a falling wedge. It's a bullish reversal pattern. You broke down from said falling wedge. Theoretically, you take your target from that, you place in the breakdown, that takes you to 176 to 172. But I think the bigger story here is you made an all-time low today. And the biggest part of that is what we had talked about in our previous video about the RSI on the weekly time frame, guys. Because actually, was that today or was that yesterday? I'm on the weekly. That was yesterday. So you made an all-time low yesterday. You closed a green hammer candle. That's typically bullish. But you didn't see that explosive move that you'd like to see if that was a bottom, right? You see them quite often on AMC. You saw it here. And look at the velocity that ensued. You just saw bam, right? This was your bottom. This was another fantastic example. This was 10% day from the bottom, and bam, reversal, right? You want to see no delay, because the more you see this choppy delay, oh, I think I'm going to print an inside bar doji, right? It's not a good look for the stock. So going to the weekly time frame, what I would assume, seeing that this is not a great rally yet, you're not back inside the falling wedge, it's not some kind of fake out breakdown. What I'd like to see is this slow trickle. And God only knows where we're going to go. But what you will see if you see that slow trickle, y'all, is you will see this 1, 2, 3, your second to third touch of bullish weekly divergence on the RSI. And that would be huge, because that would be the first time on the weekly chart that you've done that since the 2020 low, guys. So I just want to highlight this part of the video because it's very, very important. Look at this double bottom formation and look at how you made a lower low, your all-time low, before absolutely ripping grass out of the short sellers. See that touch of bullish divergence? You made your lower low, and I'll just highlight this. Your lower low in price while making your higher low in the RSI. And this was not the first time that it had happened, right? It happened back here. Higher low in RSI, higher low in RSI. But you made a lower low in price. So what that inevitably did was that absolutely slingshotted you to Neptune or to Uranus, whatever you want, whatever planet really you're gravitating towards, right? And I'm not saying that that's going to happen again today or tomorrow or next week. But what is fascinating is I've been looking for something like this on AMC for quite a while, because that's exactly what you got last go around, last bottom. And it's almost like they're running the same playbook back, which is fascinating. So we're going to have to see how this plays out. I mean, you're at 36 in the RSI right now. The trend lines are at about 33. So you have 3 points on the RSI to drop before you make this touch of bullish divergence. Technically it already is. So I'd just like to see a little bit of confluence, tap, 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 get your 4th tap of this trend line and turn around and rip and melt faces. Hopefully, right? That'd be nice right about now. In terms of fundamentals, we're just waiting for, I believe, the House. The House is going to vote on the bill on Wednesday to reopen the government. That should allow for SPY and IWM to see greater price action. Because what's happening right now is the entire market saw a little bit of relief from the Senate passing it, but now it's going to the House. And so I would anticipate between today and Wednesday, when that vote is passed, what you see a lot of times with these market-wide events is in between that, it's like a dead zone. Volatility is absent, and your favorite stocks trade sideways, eating up what they call theta decay, right? You're expiring a lot of the contracts worthless on options, and then your big boys buy those contracts in whatever direction they know it's going to go, and then they profit like crazy. So it's going to be fascinating to see Wednesday, Thursday, Friday, once that news happens, what kind of volatility you see back into the stock market, giving life. Do you see an all-time high, or do you see this greater trickle-down effect? We're just going to have to wait and see. But fascinating stuff on AMC. That's what I'm watching for, is this weekly bullish divergence. Don't let it escape your mind, because it's a very big thing. And it's probably your number one thing to watch on AMC right now as you look to find a bottom. Going into NIO, NIO's in a very interesting spot, and you can see this formation, like I said, in many different ways. But we're waiting for this confirmation from the government. Now, what I don't like is you're actually dropping below the 50-day EMA, and that's a bad look. You don't want to see that, because typically you drop that, then you're likely to come all the way back down to your previous support at $6.28. And if we drop this supportive resistance turning into support, if we drop this trend line today, tomorrow, Wednesday, right, then I would be more inclined to believe you're coming back to this support line that you had used previously, which was your tap at 680, your tap at 628, and then potentially, and I know that would suck, all the way back down. NIO stock chart is so freaking interesting right now. Potentially all the way back down. It's hard. It's a hard read on NIO right now on the daily time frame, and that's why when I say uncertainty is around, go to the macro chart, because this is really all you have to see in NIO stock. We're at $6.66. Forbidden number. Ew. This is all you have to really see on NIO stock chart is the monthly time frame. So all these lines can mean a bunch of different things, and we'll clarify as it gets more concise and clear. But one thing is clear for sure, and it's NIO's monthly. The 1, 2, 3 white soldiers pattern with more volume than each previous candle off of a very, very small, retrospectively bearish consolidation candle, and you're getting the same thing right now. So I think we're just waiting for the fundamentals, the earnings, and the government to get its stuff together before you see that next leg higher into our next shelf resistance at 950 to 940 area. I say that because you have a lot of different things, right? This is a death cross on the monthly time frame. That's when your 50-day EMA crosses through the 200, and typically when this happens, you see a bearish sentiment in the charts. And I mean, it happened, and you saw an all-time low in the local time frame, not an all-time low on the chart, excuse me, but on the local time frame, you saw your bottom. But typically what price will do is you have to come back and test this. And when you test this death cross, it's almost never going to be a sure shot that you're going to clear straight through it, right? In fact, I'd probably compare it to your monthly golden cross, in which you saw price absolutely shoot to an all-time high like crazy all-time high. And then you did come back and you retested it. You kind of flirted with the 50, but you came all the way down to the 200. You tested the 200. You saw a freaking beautiful reaction on the monthly time frame, a bullish hammer candle reaction to take you from $10 all the way up to $24. You rejected the 50, and then you came all the way back down. So what we want to see is either a tap up here after earnings, no time frames, right? I'm just holding the stock. I'm analyzing the macro, and I'm saying, wow, this looks freaking phenomenal. I believe that you're going to tap this at some point. And what it does when it happens, I would assume, is come back to previous significant resistance and establish that as support. Once you do that successfully, sky's the limit. Sky's the limit on NIO. It's pretty fascinating, because you do have this shelf resistance here at $16. Above 16, guys, there ain't much. So we're really pinwheeled. We're really squeezed between support and resistance here. So earnings on the 19th, according to Grok, is going to be very, very important. NIO earnings is when. We'll see. It'll come up with something. And then the quarterly chart. I mean, NIO's been actually holding up better than the rest of the market, which is fascinating to see that bullish strength in not only the fundamentals, right? Record deliveries, creating a nice floor in the stock, more so than the indexes and its other companies, sister companies, has actually done very, very well in holding this extreme area after this elongated candle. I mean, you had a 122% candle. You've only gone down 11%. That is fan-freaking-tastic. I don't know how else to describe that. But it's also done an acceptable job of allowing this quarterly MACD time to continue to pinwheel and squeeze and draw together until eventually you see this thing smash, right? That's what we're waiting for. We're waiting for confirmation of this green cross on the quarterly MACD. You saw what happened, 174%, 129%, and then a blow off freaking top. Now, there's no guarantee that happens again, but when you look at companies that are also doing the exact same thing, and I keep going back to Open Door Technologies because it has probably the most hilarious, and I'm actually really sad to get in on this because that is a freaking beautiful, beautiful bullish flag from Open Technologies. And oh my God, it just looks so good. A beautiful MACD cross too. But on the quarterly chart, you can see here, you had your quarterly MACD cross. And it just makes me want to shake people when they say that this thing does nothing. This indicator is one of the most bullish macro flips that you can have in a stock. You see what it did, a 1,400% to the upside explosion. As soon as you got that cross, you're narrowing, boom, right? So what I'm anticipating on NIO is a very explosive move, confirming your three white soldiers, confirming your cross. Once you get the positive fundamental news, and look at NIO going green on the day. Beautiful, beautiful, beautiful to see during earnings. Let's see what Grok is saying. Wednesday, November 19th. So if I'm available, I'll try to do some kind of live stream, or at least before. I'd like to do some kind of live stream. So that's the day to watch. November 19th, I would anticipate this week to be dead. But next week, you'll see the volatility come back into the stock. People start playing options more, right? So that'll be exciting to see on NIO as it turns green, as IWM turns green as well. That's a beautiful sight. Let's talk about GME. Still in the falling wedge, and you're still right beneath the we're cooked line, right? And that is not good. You want to see this break of the falling wedge, but it's understandable that you haven't seen it yet because the entire market is at a standstill. So you break above this trend line. If you close above it, you're currently at what? 21.52. Theoretically, you have to get up to 21.61, and you'll close right on top of that trend line. And that might bode well for a follow-through on this move out of the falling wedge. And then our next resistance we're going to see is about $23. And why is that? Because that is the previous support that is going to act as new resistance. Unfortunately, the bottom side of this uptrend that you have respected so freaking heavily. You tapped it here, you tapped it here, you tapped it here, tap, and then you just finally, unfortunately, broke through it. So it's going to act as significant resistance. So what the stock does once you get to that uptrend is going to be fascinating. Are you going to reject, come back to the golden trend, and then rip? Or are you just going to, oh no, we're over $18, right? I think it's highly unlikely, but anything should be in the realm of possibilities, right? Especially with this falling wedge. I know AMC didn't play out perfectly, but it is a bullish reversal pattern, guys. So that's what we're sticking to our guns unless you break beneath it. So it's going to be fascinating. Currently printing a daily hammer candle and establishing a new uptrend on the stock. A little bit sharper of an uptrend, but that is what you're looking to hold. If it's not going to be this explosive move, you should expect some kind of slow and steady grind along this uptrend until you hit the 50-day EMA. Same thing for NIO, except for on GME, it's this monthly time frame, right? So, or on GME, it's the daily time frame. You have a death cross. What you're going to do when you touch the 50 or the 200 is going to mean everything. Do you come back up here, reject, and then find support along your previous support line? Potentially, right? You have the opportunity for a pretty nice, on the micro, inverse head and shoulders. Shoulder one, come out, head, and then maybe you come back up here. You test the 200-day EMA, and then you create this right shoulder, and maybe you find support along the uptrend, or maybe you come all the way back down, right? Before breaking it and going higher. And theoretically, if this is what was going to happen, I would assume you take the profit target from the head to the neckline, you put it on top of the breakout of the neckline. That takes you straight into your gap fill at 28.59. Now, none of this is a certainty. None of this is 100%, but we are looking at what the market is giving us in terms of possibilities here in such uncertain times. And this is one of those possibilities. So you have a falling wedge, and that could develop if you grind higher along this uptrend into an inverse head and shoulders, because it just so happens to align as you get up here that you will be smashing into your death cross. So it'll be interesting to watch the stock do what it does, and we'll leave this up here to see if it plays out perfectly. I've had that happen a couple times, but not for quite some time. The market has been a little uncertain recently. So regardless of what happens here on the chart, though, guys, GME has $10 billion with a B dollars of cash on hand mixed with liquid assets. Bitcoin, freaking Bitcoin, guys. I am not worried about this investment at all. In fact, I'm almost excited. If you drop below this golden trend and the whole market takes it down, that's the only circumstance in which I believe that you would drop beneath such a strong trend line, is that if the entire market is taking a dump because no ship survives during rising tides. If that happens, GameStop is positioned potentially better than almost all or many of the Fortune 500 companies in the stock market. You see GameStop with a significant cash on hand position. They are literally frothing at the mouth. I can imagine Ryan Cohen is genuinely excited and anticipating on ways that he can use his cash to better strengthen the company and boost the fundamental share price. Because at the end of the day, my man makes zero. He makes nada, zero pay from the company. What he makes is profit off of the share price going up. So it is in his best interest to take care of us, right? The shareholders. So that is what gets me so genuinely excited about GameStop, not just in the short term, but in the macro, when you look at the fact that you have these gap fills at 28, at 30, and believe it or not, all the way at freaking $73, you have a gap fill. So those are our long-term macro targets on GameStop. May seem outlandish right now, but in my opinion, will come to fruition. Bam, 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 bam. Yeah, I think that's all we're going to cover, guys. I will hopefully be back tomorrow. And I just want to say thank you to each and every single one of you guys who have been giving me love, giving me support in these kind of challenging times. They always say when it rains, it pours. It's pouring. I got to figure out what's going on with my car, how I get it fixed, if it's fixable, right? So if you guys enjoyed the content, make sure to slap the subscribe button, share the video, get our name out there, right? We're almost at 1K subs, and I could not be more grateful for everyone who is a regular, returning, right? What are we at? 933, guys. We are 77 away from doing the impossible. So make sure to get it out there, guys. I love each and every single one of you guys, and I will see you in the next video. Peace. Woo!